Welcome to the market update featuring by Market Soul and Rationale. Still, tariffs keep being the major risk on the markets, and amid all this uncertainty, the market is pretty volatile. And I'll try to show you today some major charts and how they're reacting to this volatility and to the news flow. But just before skipping to the charts, I would like to show you what happened last week the data flow. First of all, last Monday we started the week with the tariff news coming from imposing from US to Mexico and Canada, and then in general the market pricing is shaping around risk on and risk off sentiment currently. And when tariffs is in the becoming serious topic, risk of sentiment kicks in, and we see that appreciation in dollar index, gold, and Japanese yen. And on the other end, when it fades away, we see that risk on sentiment in equities gaining momentum, cryptos, and some currencies like emerging market currencies, Aussie, New Zealand. Currencies appreciating. But yeah, we started last week with that news. Then we received the EU CPI data. As you can see, it's still at least they improved on inflation a lot. But the thing is, they their biggest concern is more on the economic growth side. Also, amid uncertainty political uncertainty from Germany side, euro is under pressure. Then we received S&P Global manufacturing PMI data. As you can see, it came higher than the forecast, which is good for the economic growth. Then ISM manufacturing data, same there. With all these, just remember that as we see good data on economic growth side, that means that they can postpone rate cuts, and which is a bearish scenario for risky assets. And vice versa. Apart from this a rate theme, narrative, tariff story is another story which is pretty important on market pricing. And when tariff news kicks in, risk of sentiment gains momentum, and vice versa. That's the main picture that we have been seeing since the beginning of 2025. Then on Tuesday we received JOLTS job opening numbers. As you can see, this was contradicting with the ISM numbers. As you can see, it came below forecast, which is there is less job openings. That means market is creating less job opportunities, and that might be a signal for a cautious signal for economic growth. Then we received ADP non-farm employment change. As you can see, forecast was 148 and the actual number is 183, which is pretty good. And this ADP number is considered as indicator data of non-farm payroll data that we received last Friday. So when it comes, I have seen a lot of time that both data contradicts, but just bear in your mind that there's such thing. And then we received ISM service data. Remember that service side still being a problematic part of the inflation in US, and we see that the actual number is below forecast and below previous number. And then on Thursday, Bank of England rate decision came in, and they decreased the rates. But the thing is, on the February monetary report, they changed their inflation outlook, and they revised up their inflation expectation. As you might remember from prior videos, that how UK side there's a risk for stagflation for them, because there's on the fiscal side there were problems. That's why we had seen gilt move, huge spike on it 2 weeks ago. There were some problems on that side. Also, inflation keeps elevated, and they revised their forecast. And with that news, with that revision, we saw that pound depreciation, which I'll be showing some currency trade ideas based on pound. Then yeah, and on Friday, the data for last week, US non-farm payroll data. The actual data came like less than the forecast and less than previous number, and the previous month revised from 256k to 307k, and that means like a payroll number is up, like it signals that the economy is doing well. The headline number says that it's good, but the thing is, when you check the average hourly earnings data, as you can see, actual number is higher than the forecast, and also month-to-month data is higher than previous. This 0.5% is high. That's a huge risk for the inflation, because when the Fed says that like the labor market is like in balance and stuff, it seems good. But when we see this kind of wage increase signs, that might be a signal of a potential wage price spiral, which would be the biggest threat on inflation. And that was that had been taken under control just like up until like this data. But this data, like with the high, like with the in addition to other inflation concerns arising from Trump's policies, see such data is signaling, is at least like supporting the idea of postponing rate cuts. And now I'll show you what happened last week with the news flow to dollar index. Just while I'm showing you this, let me switch to dollar index chart. This is, by the way, weekly chart. As you might recall that I'm following this weekly chart to see like technically, just to clear, when I want to clear my mind from all the news flow and stuff, I just like try to focus on this chart. And still we're at like a pretty the resistance level, and like a breakout, pulled back, and now it's consolidating around here. And if we see in the upcoming days risk off kicks off, we're gonna see that bullish dollar index and vice versa. When we come to the daily chart, so here you can see that Friday, Monday, 27th of January, sorry, yeah, today, Monday, 3rd of February, this huge spike this day was the day, was the beginning of last week, and it was the it was all about this bullish move, like price move is sourced by this tariff news that was planned to impose to Canada and Mexico, that 25%. Then they just settled, they just settled and postponed for a month. Then we saw that the sell-off, it came in up until here, and on Friday, as you can see here, from the resistance level, we saw a bounce up with the non-farm payroll data. Because why it went up with the non-farm payroll data? The average hourly earnings data came higher than expected. As I mentioned, it posed to like a risk-off sentiment kicks in, and with the risk-off sentiment kicks in, we saw that appreciation in dollar index. So in general, when you look at the currency market, what I see is with the revised inflation expectation, pound, I will be like a long in pound. That's for sure. I mean, first of all, before getting into the currency market, I first define which currencies that I would be like long and short, no matter what the chart, because it gives at least some the general market theme gives some indication. And then I switch to technical side. I'll show you right now. But when I like in like themes, current themes right now, first of all, pound theme is like the one of the major theme, and yen, because yen 10-year yields now I think it's around like a 2009 level. It's 1.7 or something %, and it's pretty high relatively. And they're the only central bank that they're on the path of rate hikes. So with the rate divergence mentality, Japanese yen, I will always be, after this point, looking to be long on yen. That will be, then I'll be checking, for example, if I'm checking New Zealand yen currency parity, I'll be looking for more like potential bearish opportunities also while I'm checking technical side. So with this in mind, in like pound, I'll be bullish, maybe Japanese yen, I'll be bullish. If risk, I mean, with the current sentiment, dollar index is like consolidating right now. That's why I'm more neutral on it, and I'll be watching technically, because it all depends on the news flow, as I mentioned just before. If the risk off kicks in, we're gonna see after this pullback, we're gonna see a bullish momentum to gain strength. But the thing is, so I'm a neutral on dollar side. Euro side, I'm bearish, as there are like a political uncertainties going on. Plus, they have like a growth issues. That's why they're the first central bank that are like let's say, I mean, rushing into rate cuts. That's why I'll be like a bearish relatively. So with this in mind, also like just to add, like New Zealand, New Zealand dollar, or like Australian dollar, Aussie side, I'm more neutral to bearish, considering they're also they're just like their rates have been like stable for a while, because they had also inflation issues. But the next step for them, certainly rate cuts rather than rate hike, especially when you compare to pound, for example. That's my mentality in general. I hope I'm being clear right now. Now let's switch to, first of all, euro dollar. As you might remember, in the weekly chart I was following here, like a breakdown, pullback, and I expect this bearish momentum, like a bearish direction, to gain momentum. And when we come to the daily, 4-hour chart, where I can be short in this one, for example. So there are like some, like, let's say, first level for sure, and second level for sure, but not here, because in this one, in the daily chart, that would be I mean, if the price goes there, that will mean that the price gets back this rectangle chart pattern, gets into this rectangle chart pattern, and then I'll be questioning the main direction of this chart. But when you come here, when you come to the daily chart, and when you check the moving averages also, I would rather to be like maybe try a short trade idea around here, as a like after pullback, to expect to see the continuation of this chart pattern, like after here. After, if it comes here, then like this, then I would expect to see such movement. Okay, like a short trade idea, maybe like a stop around here. This might be one of trade idea that you can just give a shot. Euro pound, also I had shown this one. I'm following this weekly chart, and because of the reasons that I mentioned earlier, I would be try to be like a short euro against pound, and potential breakdown from here would be the trigger signal for me. When you come to the 4-hour charts, if you just want to be like I don't know, like early entry, or you can just pyramid your position. You can just be short from here, also when it breaks down, also here, with a stop first one. But you can just treat these positions like as a separate positions. But yeah, in general, still like both like a weekly, daily, and both weekly and daily charts suggest short trade idea on euro pound. And pound New Zealand dollar, first of all, I would like to start with monthly chart. Look at this. There's a huge ascending triangle chart pattern formed after a huge downtrend, and there's a potential like a bullish reversal. And look at this monthly chart, December chart, huge breakout, pullback right now. I think this seems the best trade for me among the other currencies. Now I'm slowly coming to like a shorter time frames. Let's say daily chart, but when you come to the daily chart, just focus on this dotted line. As you can see, a breakout from here, this bar also, then pull back, consolidated, still going up. This was a like I don't like bulls are like first bears are trapped here with this move, and I still believe, like, considering this major area, just being long here, being long in pound against New Zealand dollar, both technically and with a stop around here, both technically and both like a macro theme, it seems like a nice trade idea. And when you look at the moving averages also, the 50-day moving averages is upward sloping. 21-day also, the black line is turning up. Of course, it's like already like over above like a 200-day moving average. And I think among the like from today's video, pound New Zealand long idea is the best trade idea for now. And New Zealand yen, as you can see, as I mentioned before, I would rather to be long in yen against any kind of currency. At least I will be seeking like this. My eyes will be capturing charts with that idea in mind. So when you look at the 4-hour chart in New Zealand yen, there's a rectangle chart pattern, and here's a breakdown, pullback, and I will be seeking to see some. I mean, I would rather to wait and see if price moves around here, and I would try to build my position around this area with a stop around here, something like this. If this moves around here, I will be short around here with a stop like this. And when you come to the daily chart, you see moving averages. As you can see, both moving averages also supporting this idea. Plus, if we see a further upside movement from New Zealand yen, sorry, New Zealand dollar, that will then a short-term moving averages will also be converging to the price, and that will be another supporting supporting thing. And Aussie yen, same here. Look at this, and this is already, I think this is more ready than that. I mean, if you go like more shorter time frames, you can see that, I mean, that's a bit risky because of this head and shoulder bottom chart pattern, which is bullish. But yeah, trading also, I mean, it's all risk management. You got the risk if you want to try, but I mean, just for really short term, maybe I can give a shot for the long idea in this one, to bet on this head and shoulder bottom. But that's not my style. If it's your style, then you can try, but otherwise I would be try to short around these levels with a stop loss. Let's say be short around here, a stop around here, or maybe if you're more risk averse, you can try here to be stopped out. But like just this is also another short trade idea that is ready to kick in. And quickly, I want to show you gold. As I mean, I'm not repeating in every video that in like a monthly, weekly, I have been like, I don't know, for 6 months I've been bullish on gold, and that trade idea like worked out pretty well. And currently, like in the daily chart, it's like we saw, I don't know, like we saw all-time high, and I would like to see some, in order to increase my position, or in order to be a new long, I would definitely expect some levels around here. First of all, because the shortest like 21-day moving average is traded around here. Then we're gonna see if it comes here. We're gonna see that 50-day moving average will also converge. But also this level is also pretty like pivotal level, and without seeing a correction, I wouldn't touch gold. But when you look at silver to gold ratio, sorry, I think there's a pretty promising chart here. When you look at the weekly chart, as you can see, there's a real nice parallel channel is formed, and we're at this downward, like this like a support level of this channel, and we might potentially see a potential reverse from here to see some maybe outperformance of silver on gold. Then let's check what's going on in silver technically. So when you look at this daily chart, as you can see, I was expecting to see a head and shoulder bottom chart pattern to form. So I might also, I mean, still in, sorry, also in silver, I would rather to see some pullback around here. It doesn't necessarily to be around, just wait up until this level, because sometimes two shoulders might not be symmetrical in head and shoulder chart pattern. So maybe around like a potential consolidation around this, like a moving averages, then a potential breakout from that consolidation would be the trigger for me to be long on gold. So if you think that you missed the like precious metals rally, don't be rush, just wait patiently to see a pullback, and just bear in mind that silver might provide better opportunity on that. And quickly, I had shown this UK FTSE, UK 100 index chart. I had mentioned this ascending triangle chart pattern. The potential price target is 8,990, and it's breakout, pullback, and I mean it's like a text, chart pattern. It's really it moved really well. And another chart that I want to show is Turkish stock market BIST 30 futures, and there's a head and shoulder bottom chart pattern formed after a downtrend, and potential breakout would lead to higher prices. And currently, since the beginning of the year, we see that all countries except the US are outperforming US stock market, and Turkey has not joined that team yet. And this chart is, I mean, that's how I'm monitoring that potential move from BIST 30 futures. And lastly, I would like to show a potential China move. There's an ascending triangle chart pattern formed in Alibaba stocks, and a potential breakout would be a buying opportunity, but don't be rush. After this, like 4 weeks of appreciation, at least we would like to see some consolidation to price to rest, you know. After resting, then we might see a breakout, and that would be a nice trade idea. And yeah, that's all I'm going to talk about this week. I hope you find helpful whatever you see here. We're providing like a trade ideas and stuff. If you like whatever you like here, please subscribe to Rationale newsletter, also Market Soul YouTube channel. And if you have any question, please let us know below comments. And I hope you have a really good week. Have a good one. Bye.